Hello everyone. In today's video, we're going to discuss the impact of the September jobs report and how the stock market reacted to it. A strong jobs report boosted the bullish sentiment in the market, and we saw notable gains across various sectors. Let's take a closer look at how the market moved and what we can expect going forward. Let's get started. Last week's September jobs report exceeded all expectations. Non-farm payrolls increased by 254,000, significantly surpassing the consensus estimate of 150,000. Moreover, August figure was revised upward by 17,000, and July saw a significant revision of 55,000 additional jobs. The unemployment rate dropped by 0.1% to 4.1%, marking the second consecutive month of improvement. Job growth was particularly strong in the hospitality sector, which added 61,900 jobs. The healthcare and government sectors also contributed significantly, further reflecting the strength of the labor market overall. The strong jobs report gave a major boost to the stock market. The Russell 2000, a small-cap index, surged by 1.5%, while the Dow Jones gained 0.8%. Notably, JP Morgan, one of the Dow components, jumped by 3.5%, leading the gains ahead of its earnings report next week. American Express also saw a 3% rise, hitting an all-time high. The S&P 500 climbed 0.99%, overcoming pressure from housing-related stocks, and the NASDAQ rose by 1.2%, potentially breaking its September 26th high. This is a positive sign for the overall stock market and indicates broader leadership emerging in the market. Meanwhile, bond yields also saw significant movement. The U.S. 10-year Treasury yield surged by 23 basis points this week, reaching 3.918%, marking the largest weekly increase in a year. The 2-year Treasury yield, more closely tied to Federal Reserve policy, also jumped by 37 basis points, reaching 3.93%, the largest rise in 2 years. In the energy sector, crude oil futures rose 0.99% on Friday to finish at $74.38 per barrel, with a weekly gain of 9%, marking the largest weekly increase since March 2023. As a result, the energy sector ETF, XLE, surged by 6.9%. ExxonMobil was a standout, climbing 1.8% and hitting an all-time high, continuing its 6-day winning streak. The tech sector also performed well. Meta Platforms gained 2.3%, setting a new all-time high. The stock has surged 65% year-to-date, and analysts have noted Meta's exceptional performance during the most recent earnings season. Nvidia also rose 1.7%, driven by continued optimism around AI chip demand. The stock saw a weekly gain of 2.9%, and according to analysts, investors could use the September 26th high of $127.67 as a potential entry point. On the other hand, Tesla saw a 4% decline earlier in the week after its Q3 delivery numbers fell short of expectations. However, the stock rebounded by 3.9% on Friday, signaling possible stabilization near its 21-day moving average. Looking ahead, there are several key events on the horizon. Tesla's Robotaxi Day is set to take place, and Taiwan Semiconductor will report its sales, both of which are expected to have significant market implications. Additionally, next week will bring the release of the Consumer Price Index, CPI, and the Producer Price Index, PPI, both of which are crucial inflation indicators. These reports, combined with the start of the earnings season, will be critical for determining the market's direction. Earnings reports to watch include Delta Air Lines, JP Morgan, PepsiCo, and Domino's Pizza, which are all scheduled to release their results next week. In summary, the strong September jobs report has fueled optimism in the stock market, with bullish sentiment continuing to rise. Keep a close eye on key upcoming events and earnings reports, as they will provide valuable insights into the market's next moves. If you enjoyed this analysis, be sure to subscribe to the channel and turn on notifications so you don't miss out on our next deep dive into market trends and investment opportunities. Thanks for watching, and I'll see you in the next video.